So Swiggy is going public. But there's a big problem with its valuation.
दरअसल स्विगी आईपीओ का इंतजार।
Swiggy's IPO.
स्विगी का आईपीओ।
One of the most anticipated IPOs.
जोमैटो के शेयरों में पैसा लगाना चाहिए या फिर स्विगी के?
From Swiggy Private Limited to Swiggy Public Limited.
Okay, let me explain. So Swiggy is expected to list at close to 90,000 crores. That's a lot of money. But Zomato, its only competitor, is valued at more than double that figure. On the day of recording this video, Zomato's valuation stands at 2,20,000 crores, and that's more than twice Swiggy's valuation. So why is there such a big difference between the two companies, and does it mean Swiggy is undervalued? Well, before I explain, don't forget to subscribe to the channel. Okay, so the first thing is obvious. Zomato is profitable, Swiggy isn't. In FY24, Swiggy made losses to the tune of 2,350 crores. Sure, the financial has improved since then, but Zomato, on the other hand, made a net profit of 351 crores during the same period. And so even though there's not a lot of difference between the company's revenues, scale, and even market share, Zomato has continued to remain profitable, and that's very important for public companies. But I feel the bigger issue is not necessarily the bottom line or the profit figures, but how both these companies operate in the quick commerce division. Now, Dipinder Goyal recently said, I think quick commerce is a bigger opportunity than food delivery.
I think Blinkit, if I am right about the numbers, because they change very fast, but I think Blinkit is about 40 to 50% of the size of Zomato right now, and in some cities it's actually bigger than Zomato right now. It's growing 3 to 4 times faster. So I think it's a matter of some number of months before Blinkit becomes bigger than Zomato, and we'll be super proud.
And Swiggy also, in its IPO prospectus, hints at this by revealing that Instamart's gross order value has grown much faster than the order value in the food delivery business, 56% versus 14%. So clearly there's a big opportunity in the quick commerce space, and maybe future growth will be concentrated here. So then you have to ask, who is best poised to emerge as a winner here? And Blinkit is leading the race, despite Swiggy being the first mover in this department at least. Blinkit makes more revenue, it's nearly achieved break-even while Instamart is nowhere close, and Blinkit has a larger market share. All of this points to a simple fact that if quick commerce is the next big thing, Zomato is in pole position to capitalize on this trend. And there's also another reason why Swiggy may be going public at a lower valuation. See, the plan for Swiggy originally was to go public at a much higher valuation, $15 billion. That's more than 1.2 lakh crore rupees. But I think they realized that this was perhaps a bit too ambitious after the Indian market started sputtering these last few months. I mean, take the example of Hyundai IPO. Everybody was expecting it to be a runaway success, but then poof, on listing day, suddenly the stock is not doing so well. And even the broader markets haven't really been booming. It's been showing signs of weakness. So at this point, if Swiggy is going to ask for a higher valuation and the market doesn't reciprocate, that could be a terrible look for the company. And more importantly, it's not like they can keep postponing the IPO either, waiting for the market sentiment to improve. Firstly, they need the money. If they want to catch Zomato and Blinkit, they need to continue expanding the quick commerce division, which is why out of the 4,000 odd crores they're raising for the business, they're earmarking nearly 1,000 crores just for the expansion of dark stores. They're also raising a bunch of money for marketing purposes, and I assume they're going to set aside a good chunk of that money for the quick commerce division as well. And Swiggy's investors also need an exit. Take the example of Axel. They first invested in Swiggy all the way back in 2015. Sure, they've had partial exits since then, but this is an opportunity to cash out on a big sum of money so they can pay their investors. And finally, I think the valuation difference boils down to one key detail that is really concerning in my eyes at least, which is that in the latest earnings call, Zomato said it was gaining market share in southern states, South India. Now, this is a big detail because if you don't know this already, South India has traditionally been Swiggy's stronghold. They're headquartered in Bangalore and they've had a strong presence here. But if Zomato can make inroads in Swiggy's stronghold, that's a big concern. And this kind of reflects in the market share trends as well. In 2020, Swiggy had a market share in the food delivery business of 52%. Now their market share has dropped down to 45%. That's a big dip, and if this continues, they'll always be the second best player. And second best players don't get first rate valuations. Okay, but does this mean Swiggy is a lost cause? Of course not. In fact, I'm confident, absolutely positive that the company will turn profitable in the near future. Like, it's inevitable. It's a duopoly with just two companies, and people are now so used to ordering groceries and food online that these companies will have all the pricing power in the future. Swiggy will make money, no doubts. The only question is how much, and will they always play second fiddle to Zomato? I really hope not. I hope that Swiggy realizes that it's time for some big innovation. Small changes here and there will not get it to the top position. They need to do what they did in 2014 when they came out of nowhere and blew Zomato out of the water in just a few years. I strongly believe that this cash infusion and the IPO could be that trigger for Swiggy. Zomato is also aware of the competition, by the way, and they've decided to raise $1 billion through a qualified institutional placement. So yeah, I guess we will have to wait and see who comes out on top eventually.